This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. And I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XPX index is right now down about 5.8% over the past 24 hours, trading at $58,729. The most reliable reference prices since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So let's take a look at some of our top stories. The Commodity Futures Trading Commission is ready to be the primary cop for crypto, according to acting head Rostin Benham during his confirmation hearing to lead the agency before the Senate. Benham saying the commodities regulator is ready to become the primary federal regulator for digital assets should Congress expand the agency's remit. He also estimated that 60% of digital assets are commodities. And meanwhile, FDIC Chair Jelena McWilliams telling Reuters that U.S. officials are looking to provide clear guidance for banks to hold and engage with cryptocurrencies. That could include clearer rules over holding crypto, using them as collateral for loans, or even holding them on their balance sheets. And Visa joining MASTERCARD as an investor in Deserve, the startup that offers a credit card with Bitcoin rewards in partnership with BlockFi. Deserve CEO telling Bloomberg that transaction volume for the card is approaching $2 billion on an annualized basis, and BlockFi cardholders are projected to spend roughly $30,000 per year, 50% above that of average credit card holders. And finally, Robinhood, the zero-commission trading platform, saying its crypto revenues fell to just $51 million in the third quarter, down from a record $233 million in the second quarter. Total revenue for the quarter missed analyst estimates, and the company reported an adjusted net loss of $2.06 per share versus analyst expectations of a loss of 67 cents. Shares of Robinhood right now plummeting about 11%.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
And Bitcoin in retreat amid signs of excess leverage and greed in the market, down 12% from last week's record high, according to CoinDesk 20 data. The pullback is overdue, says CoinDesk's Omkar Gaboli, and more downside volatility could be forthcoming. Crypto Quant saying the, quote, estimated leverage ratio is about to hit a year high. It seems obvious that the market is over-leveraged now, and we'll see some volatility with huge liquidations shortly. The estimated leverage ratio shown here in this chart is calculated by dividing futures open interest across all exchanges by Bitcoin reserves on exchanges. The ratio essentially shows the degree of leverage of an average investor. While a rising ratio indicates an increased appetite for risk, a very high number reflects excess leverage buildup. See circled in the chart there. Recent broader market activity, especially the parabolic rise of Shiba Inu or SHIB coin, the self-proclaimed Dogecoin killer, also points to excess greed often observed at market tops. Delphi digital analysts warning that dog coins are mooning again, which has historically been a pretty good indication of an overheated market. And joining me now to discuss more Bitcoin news is CoinDesk Director of Data and Indexes, Galen Moore in Boston. Hello there, Galen. So does that sound about right? When the dog coins moon, we're in a bit of a frothy state in the crypto markets.
I think it's, well, first of all, we have to be careful about assumptions we might make. And as I recall, the Q1, Q2 bull market was, there was the dogs had room to run in that market, Christine. I think if we first looked at the first enthusiasm for Doge and said, well, that's the market top, then you would have missed out on some gains in Q1 and into Q2. So,
Fair enough. It's unfair to generalize, but the market is consolidating downward, it seems. So what's the outlook on Bitcoin here?
Well, I think there's a great deal of I mean, there was a great deal of enthusiasm last week about the Bitcoin futures ETF. The ETF didn't disappoint, but I think maybe that kind of got the market a little out ahead of its skis. And the leverage ratio that this isn't the first time that ratio has reached peaks, although it reached a real high last week. That ratio measures the ratio of Bitcoin futures open interest to the actual Bitcoin held by exchanges. Estimates all around, even the number of Bitcoin held by exchanges itself, the denominator there, that's an estimate. But in any event, it does kind of estimate the extent to which people are sort of borrowing and getting out ahead of what is actually put in place on exchange to trade. Mm-hmm. So certainly a bit of froth in the market, maybe a little bit of a correction here. I think the Robinhood earnings yesterday were maybe disappointing to some people, although I find it hard to imagine how anybody didn't see that one coming.
Yeah. Just one more thing I want to bring up with this tweet from Charles Edwards, the founder of Capriole Investments. He's tweeting, basically, Bitcoin looks incredible here on most metrics, but leverage traders have gone out of control. We don't get sustainable price rises until that changes. And I would have to agree to some extent. Bitcoin has incredible metrics behind it. The hash power has sustained itself despite crackdown in Asia, in China. There's tons of investment and development happening right now. I mean, this morning we spoke to 3 different companies, each raising over, in the case of FTX, 420 million, Republic, mm-hmm. Over 150 million, and CoinList, 100 million. And layer 2 development with the Lightning Network also growing exponentially. So Bitcoin has some good numbers behind it, I would have to say.
I certainly think the dollars flowing into Bitcoin venture capital, Bitcoin managed funds or cryptocurrency managed funds is positive, not just for Bitcoin, but for cryptocurrency mm-hmm. in general. And that's a long term. You're going to see that play out. Some of those funds will take base positions in Ethereum, Bitcoin, and other kind of blue chip mm-hmm. assets. The only downside of all that is how impossible it's gotten to hire anybody in crypto these days.
That's true. The developers are all in high demand and difficult to acquire. So you mentioned Robinhood. Now, they did not have such a great last quarter, did they?
No, I mean, if you look at what happened for Robinhood in Q2, they had this, tremendous quarter, driven, on the back of crypto volume, which has to sort of be layer upon layer of kind of, you have to raise an eyebrow, right? I mean, you've got a business that maybe in terms of its revenue model might be illegal, and in the end, and then also on top of that, you have most of their volume and a lot of their revenue coming in a lot of the excitement about that product from users is evident in the crypto currencies that they offer for trading. So all of that, looking into Q3, crypto volumes in Q3 way down across the board. You can see it in the day-to-day numbers published by crypto exchanges, half what they were in Q2. And I think anybody, realizing what a large percentage of Robinhood's business is coming from crypto trading, seeing that crypto volumes are down, it really sort of the market's reaction to the Robinhood earnings was kind of mystifying to me. I can't believe anybody didn't see that coming. Yeah,
I wonder, is this a sign that crypto is waning in interest among retail traders, especially the millennial set? But on the other side, Robinhood did say 1 million customers have signed up for their waiting list for its crypto wallet, which is one of its most heavily requested products. So certainly there's a lot of interest.
Yeah, I mean, there's a lot of people who bought crypto on Robinhood and want to be able to get it off Robinhood, I guess. I don't know. I think it's perhaps. Yeah. I don't
know. Yeah. That's one way of looking at it. Okay. Galen, that's the last word. Appreciate your time. That was CoinDesk Director of Data and Indexes, Galen Moore. All right, coming up, another Bitcoin-centric ETF has won SEC approval. Find out which one after the break.
CoinDesk Indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
Welcome back. A Bitcoin-focused stock ETF winning approval from the SEC. The Volt Crypto Industry Revolution and Tech ETF gives investors exposure to publicly traded companies with exposure to Bitcoin. The fund will not hold cryptocurrencies directly, but will track the performance of publicly listed companies that either hold a majority of their assets in Bitcoin, like MicroStrategy, or that make a majority of their profits through mining, like Marathon Digital Holdings. Joining us now to discuss is Volt Equity CEO Ted Park. Hello there, Ted. So congratulations. How difficult was this? Give me a sense that, are U.S. regulators loosening their grip on financial products related to Bitcoin?
Yeah, I think they definitely are. I think it's a great sign that futures ETFs are coming. And I know everybody wanted coin-based ETF, but that's not coming this year, most likely. And futures ETF is pretty good. These other ETFs, as well as the ETF that we're launching, BTCR, that focuses on the Bitcoin industry. So we're really excited about how regulators are more open to Bitcoin.
Now, 80% of the fund's net assets will be invested in crypto stocks. The remaining 20% will be invested in more traditional stocks to offset the risk of the fund's focused portfolio. But I'm curious, what stocks?
Yeah, so for the 80%, that will include companies like Marathon and MicroStrategy that holds a ton of Bitcoin and a lot of the miners. And we'll choose which of the miners we prefer over others. And so Bitfarms, for example, they can mine for $8,000 or $9,000 a coin, even with current prices with the slight dip. We think that's really great. So we'll pick those type of stocks for that portion. For the other portion, we will actually hold things like Coinbase or Tesla or Twitter, companies like that according to the SEC's definition don't really count as a Bitcoin-related company. But we think that they're a Bitcoin-related company because we think that Bitcoin is a revolution. It's not just a coin. We think that, when a company puts $1 billion on the balance sheet like Tesla, when they're making a hardware wallet like Square, they're allowing people to send Bitcoin through the Lightning Network like Twitter. They're all part of the revolution. They're part of the movement. It's not just about the coin. And we wanted the ETF to also represent that.
What stocks represent that 20% of the more traditional stocks?
So it is those companies.
Okay, got it.
So yeah, Tesla, Square, Coinbase, and Twitter.
So do you have other Bitcoin-centric ETF filings in the pipeline in the meantime?
Yeah, we're definitely considering it. but nothing filed yet.
Nothing filed yet, or even something ETH related or altcoin related, or perhaps it's a little too soon. Baby steps.
Yeah, exactly.
When do you think the SEC will approve something like a physical Bitcoin ETF?
Hopefully next year. I think it'll be good news for BTCR and for the Bitcoin industry as well as Bitcoin itself. And we're just hopeful that this is just a crack in the dam. When we were approved earlier this month and the futures ETF were approved, hopefully Gary Gensler will continue to be open. And recently, some of the best applications for a physical-based Bitcoin ETF have been submitted. So even when we look at it, they look very promising. So we're hopeful. Is there any
concern that these Bitcoin-focused ETF filings are piling up and the market is becoming oversaturated? I believe there's over a dozen now in the pipeline.
Yeah. That's why we're really excited. A lot of these ETFs, including the most recent one, said that they're a Bitcoin tracker. And a lot of them seem similar. They're all Bitcoin trackers. A lot of the futures ETFs so far have all been Bitcoin trackers. That's why we're excited that BTCR is different, because it's the first one that actually puts call options on the Bitcoin industry. So we actually can we can have a viewpoint on Bitcoin. We can actually follow Plan B's stock to flow model and say, hey, we think Bitcoin's actually going to go up, and we can buy call options according to that. And no other ETF has been able to do that so far.
All right, we got to wrap it there, Ted, but congratulations. When is the launch date?
Tomorrow.
Okay. tomorrow.
Yeah.
The Volt Crypto Industry Revolution and Tech ETF will trade under the ticker BTCR on the New York Stock Exchange. Thank you, Tad.
Thank you.
All right, that was Tad. That was Volt Equity CEO Tad Park. That's it for All About Bitcoin. I'm your host, Christine Lee. You're watching CoinDesk TV.